Hello, everyone, and welcome to Schwab Coaching. My name is Cameron May. I'm a Senior Manager of Trading and Derivatives Education here at Schwab, and this is Getting Started with Thinkorswim. And today we're going to be going through the 7 different types of charts that are available on the Thinkorswim desktop platform. I think what we're going to call those is not the how about the Magnificent 7, the Mag 7. Anyway, lots of different types of charts that a trader might use. We're going to be going through the construction of each of these different charts, talk about how they're built, the pros and the cons of each, and then move on to the next. By the end, I think there should be something insightful for just about everybody. Really looking forward to this discussion. Before we can get to that, though, let me first of all say hello to everybody who's already chatting in. Great to see all my familiar friends out there in YouTube. Hello there, Ricebird and Tony, Greg, Richard, Eva, Booker T, Will, Alexi, everybody else. Manuel, thanks for being here, everyone. We always appreciate your attendance and your contributions to these discussions. If you are here for the very first time, I want to welcome you as well. And if you're watching on the YouTube archive after the live stream is concluded, enjoy those recordings. I always say that's a great way to watch these sessions. But of course, if you'd like to be here in the live stream audience, you're certainly invited. We'd love to have you here. This is a Wednesday webcast series, and we kick things off promptly at 2 o'clock Eastern time. All right, now I also need to let everybody know that Connie Hill is joining us in the chat. She's going to be addressing any questions that I can't get to just during the flow of the presentation. Connie's going to be keeping an eye out for those questions as they come in. Connie's been doing this for a long, long time now. She brings a lot of experience to the discussion. Thanks for having my back there, Connie. Connie and I would also like to issue an invitation to everybody watching. If you have an account on X, you should be following your favorite Schwab presenters there and elsewhere on social media. So you can find Connie on X at Connie Hill CS. You can find me there at Cameron May CS. You can now also follow me on LinkedIn. You just go to linkedin.com/in and then /Cameron May CS will take you right to my profile. You can give me a follow there. But let's get into this discussion of the very different types of charts that are available on the Thinkorswim desktop platform. And as we do, of course, we need to first pause to consider the risks associated with trading and investing. This is important data, so please bear it in mind. All corporate or issuer names and market data shown are for illustrative purposes only, are not a recommendation, offer to sell, or a solicitation of an offer to buy any security. Schwab does not recommend the use of technical analysis as a sole means of investment research. There is no guarantee the execution of a stop order will be at or near the stop price, and investing involves risks, including the loss of principal. All right. So let's outline an agenda for what we're going to be talking through today. Some of you may not have noticed this because I think there are some defaults that traders tend to go to as they're looking at stock charts. But yes, there are actually 7 very different types of charts that might be used in the planning and placing of trades on Thinkorswim desktop. So I'm going to start with what might be, let's say, just the simplest in its construction type of chart. And we're going to move in sort of grades of difficulty, move on up the chain to possibly the most complicated type of stock chart. So we're going to be going from a line chart all the way through to Heikin-Ashi charts and everything in between. You might not have even known that there are 7 different types of charts. I'll show you where they're found, how they're built, and how they might be used. Okay. Mark says you love dipping into these sessions, always something new to learn. Well, let's try to deliver that again for you, Mark. So let's start with a type of chart that I think most veteran traders would be familiar with. This is known as a line chart. So throughout this discussion, we're going to be using Microsoft on a 3-month daily view to explore these different types of charts. Okay. So the first type of chart, a line chart, some traders are attracted to this because of its simplicity. The construction, to me is very straightforward. We just look at the closing price for our stock, in this case, Microsoft, every day, and we make a dot on the chart. And then we connect the dots. We color a drop from one dot to the next as red. We color a rise from one dot to the next as green, and that creates our line chart. That's really it. So as we look over the last, let's say the last month or so here, we'll see red lines as the close to close changes are going down. We're going to see an occasional green line as we get 1 or 2 stronger closes, but that creates this line chart over time. Now, for some traders, the simplicity is appealing. They don't need the day-to-day, intraday noise of what's happening with price. They don't need those details. Maybe they have kind of a longer term perspective. Maybe they don't really care about the timing of entries and exits, to the, let's say, to the point of maybe to the hour or the minute. So they just want the cleanest chart possible. Well, that might be the line chart. Now, if you don't know how to switch to a line chart, each of our chart types are found right up here under Style. So I'm going to click on Style, and you'll see that right here where it says Chart Type, I've selected a line chart, and here are the 7 available charts. And you'll notice this one's actually the 5th. So I'm not necessarily going in alphabetical order, which is the way that these are displayed, but I'm going to start with what I consider to be the simplest in its construction, and then move on to the most complicated. Hopefully that'll be a good warm up as we go. We can get our brains kind of loosened up and absorb this new information as it comes in. So there's our line chart. So advantage, possibly simplicity. What's a possible disadvantage? Well, if we need those extra details, the line chart delivers pretty limited information. So I'm going to stick with the line chart theme for just a moment, look at it through a slightly different lens, and then we'll add some information to our chart by selecting a different type. Next up, though, let's go to a chart that's built directly from the line chart. Now, as we go to the chart type and I hover over area, chat in, let me know, yes or no, have you ever even looked at the area chart before? As I select this, keep your eye on what's happening in the background, and you'll see a very distinct difference between the two lines, and yet not new information being added. So let me select area. This is our second type of chart, and really all it is a line chart with the area below the chart colored green. That's it. And for some people, this visual presentation cleans the chart up even further. They might see this as highlighting the peaks and troughs even more prominently. And to some, that has a specific appeal. Now, it still lacks the information that's available on other types of charts, but really the difference between a line chart and an area chart is just preference. Okay, so KJ Herman says, nope, haven't used this before. Greg, you've used this before? And I would suspect a lot of people are not familiar with an area chart. Let's see, there was one other question here. Okay, looks like that was addressed to Connie. Looks like it might be about a video that she did previously, so I'll let her address that. But that one I don't really think carries any further need for explanation. I think it's fairly straightforward. One thing that is lost here a little bit in moving from a line chart to an area chart is that color scheming. But we can still see the highs and the lows, just quickly visually identify those. Ricebird says you haven't used these before. All right, well, let's step a little bit further, add a little bit more information to our chart, for better or for worse. Some traders feel like they don't need this information. To others, it might be vital. So I'm going to move on to what's known as a bar chart. So we're going to go to our style, go down to the chart type, and choose bar. This is very different from the first two. It's not just a line connecting the close to the close to the close, but we're adding 3 more points of data for every single trading session on a daily chart, or let's say 3 more points of data on an hourly or even a minute by minute chart. And that is, in addition to the open, we also see the high, the low, and in addition to the close, we also see the open, the high, and the low on a bar chart. So let's talk about how each of these bars is constructed. You'll notice here, let's look at these last two. We have a green one right here, and we have a red one, which is today's bar. And it's really constructed of each one of these is constructed of 3 lines. There's a vertical line, and then there are 2 horizontal lines, one sticking out the left, the other one sticking out to the right. The vertical line is actually just showing us the change in the total range in price for the selected time frame. So on a daily chart, what that vertical line is telling us is how much the price has reached, or how high we've reached, or how low we've reached for that day. So if I point at, for example, today, let's point at this bar. Let's look up here in the upper left, and we're going to focus on the H and the L, the high and the low. So as I point at that bar, I can see the highest price for today was 484.24, and the low of the day was 475.20. That's information that wasn't available on the line or the area charts. Now, in addition to that, we have these other two lines, one that's sort of entering from the left, and the other one is exiting to the right. So those horizontal lines are showing us the opening price and the closing price, or in the case of the last candle, if the markets are open, it's actually just the current price. So if I look at this line to the left, you can see, I can visually see, that's right about 476 and change. Yeah, the opening price of today was 476.32 right here. And the current price, if we were to close right now, we'd be at 481.68. So that's what each of these bars tell us. Open, high, low, and close. 4 bits of data for each day or each period instead of just one, which is typical of the line and the area charts. But there's also a color scheming here that's vital. And for each of our chart types, you're going to see this color scheme, red and green. However, the meaning of red and green is going to change from one chart type to the next. So we have to be aware of that. So what does the red and green mean here? Well, in the case of a bar chart, it's telling us the closing price compared to the previous day's closing price. So if we look at today, and we look at where current price is right now, if this were today's close, we're at 481.65, that is below where we closed yesterday. So that colors the whole bar red. Now, if we compare that to the open of today, some people would look at this and say, Cameron, we're up from the opening price, so why is this a red bar? It's because the color scheming comes from a comparison to yesterday's close, not this morning's open, right? MBH says, is it possible to change the look of the area chart? It is customizable. A quick way, one thing that I'll just say broadly for our attendees here is that I'm using the light background color scheme on Thinkorswim. And so if we're following along at home and we're looking at a black or the dark color scheme, this can actually look significantly different. So up here under our setup, if I go to application settings and we select look and feel, some of you might be using, let's say, the dark color scheme. And you can see how different that appears from the light color scheme that I'm using. So if you want your chart to look like my chart, that's where that selection would be made. Okay. In any case, that's our bar chart. Now, this is an early form of charting that we used to be drawn manually for, actually stretches back. I'd have to go look at the actual introduction of the bar chart, but it goes back at least many, many decades. I think it goes back into the hundreds of years, just drawn on a chart, because obviously we've only had computers in widespread use for a couple of decades, well, a few decades at this point. But there's our bar chart. And I think you can see for some traders, there's more information here, which can be good, or it might introduce more noise. That's a potential con. All right, let's see. MBH says, to clarify, I was wondering if it's possible to have the gradient look on the area chart to indicate something else. I'm not going to get into that. That could be built with a custom script, not with the system defaults. But I think I see where you're going with that. I'll just have to say it's not going to be one of the defaults that we could change. Okay. But now let's move on to a fourth type of chart, which is the very popular candle chart. And a candle chart has as its foundation a bar chart. So here's what a candle chart does. It actually this is the only real difference in a candle chart, aside from color scheming. It just basically draws a box using the open and the close values. So if we use this green bar from a few days ago, a candle's going to do this automatically. Basically, it's going to draw a box from open to close, and then it's going to color scheme that according to whether we rose or fell during the trading session. So it gives us kind of a different visual presentation of the day-to-day or hour-to-hour price activity But let me just remove that. And let's come up here to our style. And I'm going to switch this from a bar chart to a candle chart. And you can see it's a very different look from a bar chart, but delivering very similar information. The basic difference here is really trader preference. Candlestick chart is still telling us day-to-day changes. It's still telling us open, high, low, close information, but it's displayed a little bit visually differently. And the color scheming is different. Booker T says the white background hurts your eyes. Yeah, I do. I actually do polls from time to time, and it kind of waffles back and forth. Sometimes my audience prefers the dark background, which ironically hurts my eyes. What tends to happen with me is when I stare at that dark background for too long, I get that sort of that negative imprint. You know, when you look at something, you look away, you can still see it. That's what I get. So yeah, I typically will use this white background, with apologies to those that prefer the dark. Someday, maybe we'll hit a consensus, but until then, I'll just go with my preferences. Is Marv says, what is the value or good use of the bar chart? So the value, as I attempted to explain, more information than a line chart. The usage for each one of these is kind of going to be pretty similar. For technical traders, they might be looking for things like trends. Where are apparent price floors and price ceilings? Each of those sorts of technical approaches can be done on each type. Now, for different types, like even as we move on to Heikin Ashis, you're going to see there's going to be potentially different interpretations, which is why we will make videos about the different types. But like with candle charts, there's a whole field of study unto itself regarding just the individual candles that could still technically be done on a bar chart, but it would be a little bit more unwieldy since it's historically been built on candle charts. But in any case, let's look at the color scheming here. So one thing that is lost as we move from a bar chart to a candle chart is we can't easily see which is the high and which is the low. If I were to take away the colors, and if I were to take away the fact that some of these are solid candles and some of these are white candles, we would lose. We'd just be looking at a box with a line sticking out the top and a line sticking out the bottom. Now, the wicks can still tell us where the highs and the lows are, so that's not information that's lost. But we can't tell the difference from one candle to the next, where the open is and where the close is, and that's where the color scheme becomes vital. When we see a white candle, we might also describe this as an empty candle, or because the outline is green, we could call it a green candle. But when we see this style of candle, that tells us that the open was down lower and we closed up higher. In other words, that during the trading session, there was bullishness. Closed higher than we opened. When we see a red candle, this tells us that the session closed lower than the open or fell during the day. So that's why we get this sort of a unique thing here. What color was our bar today? It was a red bar, because from day to day, from close to close, price fell. But from open to close, price has risen. That's a difference in the color scheming on this candlestick, or on this candle chart, right? Now, beyond that, the information is still there. So the choice between a bar chart and a candle chart typically just comes down to trader preference. If we do look for things like traditional candlestick patterns using, let's say, dojis or butterflies or hammers or engulfing patterns or doji, or I already said dojis, but in any case, if we're looking for those sorts of things, the trader might choose a candlestick. Right. Now, as with the bar chart, though, the extra information available may just be noise. It might not be needed for those that prefer to use, let's say, a line or an area chart. So that's our fourth type of chart. I don't think that there have been any enormous surprises yet for most of the people watching, but now we're going to go a little bit deeper, right? We're going to switch to something called a candle trend chart. How many of you are familiar with this? As I switch my chart style, let's choose our type, move that to candle trend. This is now giving us a combination. So our bar chart basically is colored according to close to close. A candle chart is colored according to open to close behaviors. Now we have a combination of the two. That leaves us with 4 different types of candles. There's not just white charts or just red charts. We now see green charts or solid green charts. We see empty green bars or candles, I should say. We see solid red candles, and we see white or empty red candles. So this is a combination of the two. Now, the two with a candle trend chart, the two that are generally seen as the strongest are the solid red and the green white candles. Ricebird says they use the candle trend mostly. Yeah, so there's more information. Well, it's at least the information is summarized in a different way here, right? So let's talk about these. I think the big red candles, these are the ones that are probably the most intuitive. With these candles, this is telling us we closed lower than yesterday's close. We also closed lower than today's open. That's probably the most bearish combination of factors. With these white candles, these empty white candles with the green outline, that's telling us that we closed above yesterday's close and we closed above today's open. But then we have these other ones. We have these solid green ones, and then we have these empty red ones. Well, solid green is telling us that we closed above yesterday's open. You can kind of see that here. You can see this candle, the whole thing, clearly above the previous day. So we closed above the yesterday's close, but during the day, we faded. So each time price falls open to close, the candle gets filled in. So when we have a solid candle, that's telling us that price fell from open to close. On the other hand, anytime that we see an empty candle, that tells us that price rose from open to close. So if we look at, let's say, this candle right here, or even today's candle, we'll just use that as our example. Today's candle is red, which tells us that we fell from close to close. So close to close determines the color. We rose from open to close. So it's whether we're filled or empty that tells us what happens from open to close. Combination of two things. So this tells us a little bit more information, but it definitely, Ricebird can probably attest to this, takes a little bit longer to train the eye on what we're seeing here. Because I think it's only natural if we were to see something like this as an example. We might think, ooh, solid green, doesn't that mean really good? Not really. Nope. It means, yes, we were up from yesterday, but down from this morning. So it takes a little while for the brain to get used to that. But for some traders, they have that process, as Ricebird has stated, or they have that preference. As Ricebird has stated, it's their preferred approach to charting a stock. Now, notice as we're discussing each of these, I'm not making the case that one is superior to the next. Each have potential advantages, and each have potential drawbacks. With the price or the candle trend as our example here, the potential advantage is we're getting even more information just at a glance. The potential disadvantage is it might take a little bit more thinking, a little bit more brain power to process that information. And more information doesn't always mean better trading. Some of the time it can just lead to more noise. It can lead to more trade confusion. So it just comes down to the trader finding the style of chart that best suits their approach to the markets. And then maybe they just get more accustomed to, more proficient at that chart style. All right. So that's candle trend. I think that's going to be new to a number of you. Let's move on to another one, even go a little bit deeper. Our next candle type, or our next chart type, is actually going to build in not just price activity, but also include a volume element. So this one is known as equivolume, which is ironic because equi would typically mean equal. And the purpose of this is to show that not all candles are necessarily equal from that volume perspective. So these, you can see, very different than the other candles that we've been looking at. One thing that is just eliminated from this is the opening value. Doesn't play a role in the construction of the equivolume candles. Instead, we have a combination of volume plus high, low, and close. So you'll notice with some of these candles, some are pretty significantly wider than others. So the width is a visual representation of how much trading volume there was on that day, or if we're looking at an hour, during that hour. Wider candle equals stronger volume during that time frame. Now, the rest of the candle is, well, the height of the candle is determined by the high and the low, just like with a traditional candle or with a candle trend. But then finally, there's a line drawn wherever we close. So just at a glance, I can see, like with this little candle here, it traded in a range from a high here down to a low there on pretty heavy volume because of the width, and closed trading right here at about 540. And I can see that, even I can confirm it just by pointing at it. I can see those factors up here. Now, the final element here, obviously, is the color. And since open is not included in the construction of these candles, it's just close to close. So for each one of these, if we look at this, we can see that this close was lower than that close. This close was higher than that close. Pretty quick to see how these are constructed. Here's a close that was higher than the previous close. Here's a close that was lower than the previous close. So Mark, you say this one's fine. You haven't used the equivolume before. Saves having time to have a separate volume study below the chart. Precisely. Yeah. If the trader feels comfortable introducing more information into the visual appearance of their chart, this is a chart that might assist with having that additional information. Now here, obviously, we're surrendering a piece of information, possibly in the interest of keeping things a little bit more simple. So the opening price is seen by the creator of this tool as being kind of inconsequential. It's just a moment in time reflecting maybe what just happened overnight. And that will also be presented possibly within the range of trading today. So yeah, the opening price gets ignored in favor of introducing that volume element. And for some, in a way, it simplifies the analysis. Just looking at close to close for color scheming, we can see quickly the volume. You can see how for some traders this might be an attractive alternative to some of the other more traditional approaches to candlestick or to charting in general. And then beyond that, it still can come down to trend analysis, support and resistance, all those typical technical techniques. So equivolume, probably new to a lot of people watching today. We have one left, and that is the Heikin Ashi chart. Now, I've gone deeply into Heikin Ashis on a few occasions here. So let me just point this out as we dive into this. Let me come to our channel. So if you haven't done this already, do yourselves a favor. Pop down below the stream right now or down below the video and click on the subscribe button. Subscribe to our Trader Talks channel on YouTube. It doesn't cost anything. It only takes a second. But this is where we house previous webcasts, including webcasts that I've done going into deep detail about Heikin Ashi candles. So let me just type in let me get my cursor out of the way so you can see how this is spelled. So it's Heikin, Heikin Ashi. I don't even need the Ashi. Let's just type in Heikin, and you'll see here's a discussion of Heikin Ashi trading. There's a very different way to trade candlestick charts. So this, I go into the precise construction of the candlesticks. I explain how they might be typically used to generate trade signals. And we plan and place an example trade using a Heikin Ashi setup. So you might want to check that out after today's webcast is over. Let's go back here and load up that final chart style. We're going to go to the equivolume. We've covered each of these except for that one. Let's go to Heikin Ashi. So with Heikin Ashi, it might look like, oh, Cameron, all you did was load up a traditional candle. No, as we squint a little bit closer, Heikin Ashis are pretty substantially different than a traditional candle. They still have the white and red color scheming, but something that you'll notice right away, a couple of things. There are no gaps on Heikin Ashis. They were specifically constructed in an effort to eliminate gaps. The way that that's done is that every Heikin Ashi candle just starts in the middle of the one before. So that becomes the opening value. It's just not the opening price when the opening bell sounds. We just start at, okay, where do we sort of finish yesterday? The purpose here, we're basically looking at where was the bulk of yesterday's trading and what changed in the direction to the sort of the bulk of today's trading. So each candle starts at the middle of yesterday and then goes to sort of the average of today's candle, not just the close of today's candle. So Ricebird says you've toyed with this style. All right, well, that's the basic. Obviously, that's a very high level overview of how these are constructed. But the net result is there are no gaps. And quite commonly, we're going to see candles with no lower shadow or wick on those bullish moves, or no higher shadow or wick on the bearish ones. And typically a trader might look for these with no lower shadow and see that as particularly strong time for the stock. If they see no upper shadow, that's a particularly weak time for the stock. Now, final thing to say about the Heikin Ashi candles, since they go basically middle of yesterday's trading activity to basically middle of today's trading activity, that's the concept there. What's the color scheme? Well, this is an open to close color scheme. So with Heikin Ashi candles, if we rise from open to close, we get a white candle. If we fall from open to close, we get a red candle. So there's an example. Let's see if we can find one here where we had price. See if I can find an example of it. Yeah, like right here is a red one where we actually rose from yesterday. So close to close, this would be up, which would seem to indicate, shouldn't we have a white candle here? Nope. We're looking at open to close. All right. There's maybe a little bit clearer one right there. This one, it's so flat. It's such a shallow doji candle that it might not have been obvious where the open and close is. But here we have one that's a little bit larger body. We can very clearly see closed above, closed below. No, that's not a good example. Anyway, the other one is a better example. But, oh no, right here. There we go. Closed above the previous close, but down from that session open. That's the color scheme. All right, so there's your introduction to Heikin Ashi candles. If you want to see an example of, in more detail, of a trader planning and placing according to traditional interpretation of Heikin Ashi candles, you can go check out that webcast that I did that was dedicated just to this candle type. So that is going to, with the discussion of Heikin Ashis, we've accomplished what I set out to do today. I wanted to talk through what I sort of tongue-in-cheek refer to as the Mag 7 on Thinkorswim charts, the 7 different types of charts that can be added to Thinkorswim. I hope you saw something new at some point during this discussion. I would guess that the vast majority of you did. If not, maybe just a little bit of a helpful repetition or reminder of the different charts that maybe you hadn't considered in a while. But this is what we do with our Wednesdays. We just acquaint ourselves more deeply with the tools that are available on Thinkorswim from a perspective of someone who's just getting started. Okay, JDLMI says, Cam, are there any scripts that have the name of it on top or bottom of the candle? I'm not sure about that. I can envision that being created. I don't know of any that I'd be able to provide to you. But Will, Greg, Robert, my pleasure. And now, as I let you go, just make sure that you're aware of all of the educational resources that are available to you from Schwab Education, starting with our channel. I already mentioned, if you haven't subscribed yet, go subscribe right now. It doesn't cost anything. It only takes a second. You just click the subscribe button down below the video. But our Trader Talks Schwab Coaching webcast channel on YouTube is where you can join our live streams. You can find our playlists of previous webcasts. You can even do a keyword search for topics of specific interest, just like we did here with Heiken Hashi's. Now, as an example, let me go to the playlist. And my webcast series is called Getting Started with Thinkorswim. So I'm going to scroll right down to the bottom here. It happens to be the one that's all the way down at the very bottom of the list. There it is, Getting Started with Thinkorswim. But if I were to click on View Full Playlist, you can see here was last week's discussion. Learning, trading, and trade tools with free education on Thinkorswim. So I went through the educational offerings that are available on Thinkorswim, and then also showed you 4 other resources that were off the Thinkorswim platform that support trading learning, investing learning, and also learning about using the Thinkorswim tools. So you may want to check that one out. Now, another thing that I would suggest you do is to follow your favorite coaches from Schwab on social media. You can follow Connie and me on X as an example. So you can find Connie on X at Connie Hill CS. You can find me on X at Cameron May CS. And I'm very active on social media. If you reply to one of my posts, I just try to reply right back to you, and it allows for interaction that's not really otherwise available when the camera's not on. Now, another thing you can do as of about a month ago is follow me on LinkedIn. 134 people have chosen to do that. I just launched my LinkedIn profile, but I'm posting on LinkedIn. A nice advantage of this platform for me is that I can say more stuff because there's not that character limit. But if you reply to one of my posts here, I just try to reply right back to you here as well. So everybody, give me a follow on LinkedIn. Give us a follow on X. Time for me to let you go. Connie, thanks for helping out, chat. It's always appreciated. I will look for all of you in a future webcast. I'll also look for you on social media, on X and on LinkedIn. Thank you to everybody who's already clicked the thumbs up. I can see about 150 people watching the live stream right now. And how many? There's my count. 50 people have already clicked that thumbs up button. That's always appreciated. It's a nice pat on the back, and it also tells YouTube that you're enjoying these videos, and it promotes that video just a little bit more in the YouTube algorithm. Helps us find a wider audience for these free webcasts. So thanks for doing that. But yeah, I will see you at a future webcast. I'll see you on social media. But whenever I see you again, until that moment arrives, I want to wish you the very best of luck. Happy trading. Bye-bye.